Hey everyone, and welcome. Let's think about the financial markets for a second. Imagine you're on a starting line. Are you a sprinter, ready for a short, explosive burst of speed? Or are you a marathon runner, pacing yourself for the long haul? Today, we are breaking down those two completely different races, trading and investing. And it really all comes down to one big question. This question is at the heart of so many financial choices we think about. On one hand, you hear these wild stories of overnight success. On the other, you hear about slow, steady, patient growth. But what's really the difference? Well, these two ideas, getting rich quick versus building wealth, they perfectly capture the split between a trader and an investor.
So here's our game plan. First, we're going to jump into the fast lane and look at the trader's sprint. Then we'll slow things way down for the investor's marathon. After that, we'll put them side by side in a head-to-head showdown, see who's playing the game. And finally, we'll get to the most important part, figuring out what financial pace might just be the right one for you.
All right, first up, the sprint. Trading is all about speed. It's about being agile and reacting to every little twitch in the market. This is a world where success isn't measured in years, but in hours, minutes, even seconds. So what exactly is trading? Well, at its core, it's buying and selling stuff, like stocks, over and over again. The goal? To make a profit from all those tiny, super fast price changes. The two words you got to remember here are frequently and short-term. This isn't really about owning a company. It's about making money off its stock's next move. And when we say short-term, we mean really short. A trader might buy a stock in the morning and sell it before lunch, just trying to catch a small price jump. Or maybe they'll hold on for a few days, or even a couple of weeks to ride a wave of hype from a news story. For the trader, the finish line is always right in front of them. Okay, so if you're gonna move that fast, you can't just wing it, right? You need a very specific set of tools. And we're not talking about reading some 100-page company report. This is all about reading the market's mood in real time. A trader's best friend is something called technical analysis. Basically, it's the idea that everything you need to know is right there in the price chart. They're looking for patterns, for clues, like these things called candlesticks. It's actually pretty simple. A green candle means the price went up during that time. A red one means it went down. They try to read these patterns to guess what's next. But because it's such a high-stakes game, they have to manage their risk. They use safety nets, like a stop loss, which is just an automatic order to sell if a trade goes bad and cut their losses. All right, let's all take a deep breath and change lanes. We are leaving the sprint behind, and we're settling in for the marathon. This is a totally different race with a totally different mindset. It's all about endurance.
So investing is the art of buying and holding on for a long, long time. We're talking years or even decades. The goal isn't to make a quick buck today. It's about building real, significant wealth over time as the things you own become more valuable. And hey, maybe even getting paid a little income while you wait.
The investor's toolkit looks completely different. Forget the fast-moving charts. Investors are more like detectives. They use what's called fundamental analysis. That means they're digging deep into the business itself, checking its sales, its profits, how much debt it has. They're asking, is this a genuinely good company that's going to be around and thriving in 10, 20, or 30 years? They're hunting for real value. Plus, a lot of great companies actually share their profits with their owners through dividends. It's literally like getting paid just for being patient. And no one captures this philosophy better than the legend himself, Warren Buffett. This quote, it says everything. He's not thinking about selling next quarter or next year. He's thinking about owning a piece of a great business, well, forever. And just to show you what forever can look like in the real world, Buffett's company first bought Coca-Cola stock way back in 1988. They've now held it for 36 years. Think about that for a second. That's holding on through multiple recessions, market crashes, and huge booms. That right there is the marathon. Okay, so we've met our two athletes. We've seen how they train. Now it's time for the main event. Let's put the sprinter and the marathon runners side by side and really see how they stack up. It all boils down to the fundamental question each one is asking. The trader is obsessed with timing. Their brain is always screaming, when's the perfect moment to get in or get out? But the investor, they're focused on quality. Their question is way simpler. Is this a good company that I want to own a piece of for a really long time? This table just lays it all out so clearly. First, you've got the time period. We're talking hours and days versus years and decades. Total opposites. Then look at how they analyze things. Traders are staring at charts and patterns, while investors are reading financial reports. Naturally, that leads to a huge difference in the risk level. Trading is high-octane, high-stress. Investing is generally a much calmer, more relaxed ride. And finally, the goal: fast cash from price swings for the trader versus steady, long-term wealth for the investor. Now, these aren't just ideas floating around in space, right? These are real strategies that real people use every single day across all kinds of different markets. So let's zoom out and take a look at the playground and some of its most famous players. And this is super important to remember. This whole sprinter versus marathon thing isn't just about stocks. You can apply these same mindsets to pretty much anything. You can trade currencies on the Forex market, you can invest in commodities like gold or oil. Heck, you can even be a trader or an investor in things like property and cryptocurrencies. The core principles stay exactly the same. And of course, each strategy has its legends. On the trading side, you have these absolute titans like George Soros and Paul Tudor Jones, guys famous for making enormous, high-stakes bets on where the market's going next. And then on the investor side, you have the icons of patience. Warren Buffett, of course, his teacher Benjamin Graham, and the brilliant manager Peter Lynch. So after looking at the strategies, the tools, the players, we finally get to the most important question of all. It's time to turn the camera around and point it at you. What's your financial pace? Look, choosing between these is a lifestyle choice as much as a financial one. Let's be real. Trading is intense. It's basically a full-time job. You have to be glued to your screen, and you need a stomach made of steel to handle the stress. Investing, on the other hand, that's a whole different vibe. It's much more of a set it and, for the most part, forget it kind of deal. It's designed to work quietly in the background, which is perfect for people with busy lives who, want to sleep at night. So here is the absolute most important thing to take away from all this. There is no better way. One is not right and the other wrong. The right path for you depends completely on your own goals, how much risk you're truly comfortable with, and just how much time you can actually commit to this stuff. And that brings us right back to where we started. Now that you've seen both races up close, the frantic energy of the sprint and the steady pace of the marathon, the question is, in your own financial journey, which one are you? Are you a sprinter? Or are you a marathon runner? Knowing that answer is the most important first step you can take.